Hi everyone, welcome to my channel. Thank you very much for stopping by and checking out this week's weekly market analysis based on market profile view as well as the candlestick pattern view. So without a further ado, let's get right into it. So as always, I stick to analyzing the ES futures, the S&P 500 index futures. So currently it is March 2023 contract that is ongoing. So last week on Friday, on December 16th, I had posted a video stating that 3855.25 would be the line in sand for the downside move, targeting the balance low, and then the value area high, 3881.75, to be the line in sand for the upside move. So let's check out what happened. So on Monday we had opened right near the upward LIS, meaning upside line in sand, but then we had continued going lower to repair the poor low that was there, and then we closed below last Friday's low, and then the trend continued. We broke the balance low. However, we closed back again. In the overnight session we broke the balance low, and then we opened again within prior day's range, and then we formed a P shape by making the 3-day balance low. And the reason I have 3-day balance low is because the value area of last Friday, Monday and Tuesday's value area is overlapping, and that is why it became a 3-day balance low. Like the high became the 3-day balance high, and then the low became the 3-day balance low. And then we had a P shape on Tuesday, and then we got a firecracker effect with the break of the prior days, like Tuesday's high, and then we hit the the trend continued up. However, we couldn't stay above the balance, so we looked above the balance, and then we closed on Wednesday. But then on Thursday we had a gap down, but still within Wednesday's range. Then we broke down below the balance, but again closed back within the balance. The following day, today Friday, we had opened within Thursday's range, and then made the 3-day balance low as the support. And this is what we have for next week. So we had a P profile formation today, and the volume point of control and TPOC, the time point of control, both are around 3860 level. So spike rules are applicable. The reason I mentioned spike rules is because there is insufficient time for the auction to be completed in the last 1 hour. So we closed with not enough time to retrace back to the point of control. So we closed right near the high of the day, and that is why the spike. So 3870.25 would be the line in sand for next week. So below this you want to stay short or take puts targeting these levels that I have marked. And then since we looked below and failed on Thursday, so the target is the other end of the balance. So 3912 would be the target for next week on the upside, above the spike base 3870.25. and then there are some single prints that didn't fill, so you might want to keep an eye on those levels. That's why I made those as targets. So that's about it for based on the market profile view for next week. So spike base would be your key line in sand. Below this you want to be bearish and take puts. Above this you want to be bullish and take calls, targeting the balance high. That's it, guys. Now let's jump into the candlestick pattern view, and then top down approach. Let's go to monthly chart. So on monthly chart, we still have 1 more week left in December. So next week is going to be the last week of December, and we are trading still in the November month range. So the trend on monthly is up. The reason being, we broke in the December month, we broke the November month's high, and then we are trading within the November month's range. So this is the trend is up but balancing on monthly. And let's go to weekly. Let's go to weekly chart. Okay, so on weekly chart we looked below the prior week's low, but we couldn't stay below, and we closed within prior week's low. So the target generally is the other end of the weekly zone. So the target would be 4180, which could be too extended, but let's see. Currently the trend is down but balancing on weekly. The trend is down is because we broke the prior week's low, and so the trend is down. But then I mentioned balancing. The balancing is because we are still trading within prior week's range. If you notice the close of this week's candle, it is 3869.75. From this small pop-up window you see the C section of it, and then the low of the prior week is 3855. So we closed above prior week's low, and so the trend is balancing down but balancing. Let's go to daily chart. So on daily chart the trend is balancing because we are fully trading within Thursday's range. So the trend is balancing on daily. So some people call it inside day as well. So whenever inside day forms like this, like one candle is fully within another candle, you actually want to go with either the breakout of this small little candle or breakdown of this small little candle. That's generally based on candlestick patterns. Today we formed an inside day. So to summarize, for option positions, so spike base would be the LIS. LIS means line in sand. So below this you want to stay short or buy puts targeting these levels that I have marked, and above this you want to stay long or buy calls targeting these levels that I have marked. With that being said, trade safe. I hope you find this video helpful. If you did, please give it a thumbs up and stay tuned by subscribing. Thanks again, and have a nice happy holidays. Wish you and your family Merry Christmas and a Happy New Year. Happy holidays again. Take care. Bye bye.